Okie dokie folks, hello and welcome back to our latest episode of Ask CC, where you ask and we do our very best to answer. Now, of late, we've had more and more property owners and certainly a lot of buyers asking, why have interest rates dropped so much over recent years? And why are they saying that interest rates will drop even further when they're already so goddamn low? Well, the first thing to try and understand in this equation is what does the Reserve Bank or the RBA of Australia essentially use the cash interest rate for? Well, the RBA uses the cash interest rate as a tool to either stimulate Australia's economy into growing if the economy is flat or dropping, or much the opposite effect to try and slow it down if inflation or other economic factors, whether they're local or global, are growing too rapidly and out of control. It's one of the main instruments used to try and keep long-term economic stability within this country. So in recent years, how have rates gotten so low and how much further can they possibly drop? Well, since their past high back in November 2010, post the GFC, when the cash interest rate sat a lot higher at 4.75%, the past 8 to 9 years or so has seen the rate progressively drop lower and lower to its current level of 1%. This illustrates some of the global challenges faced since the GFC and that tightrope that the RBA and the Australian government have been treading over the past decade or so to keep our country moving in the right direction. And the main reason the rates are at the presently low levels. Now, most advanced economies right around the globe currently find themselves in a very similar position to Australia right now. So, why have they been dropping over the past decade and why are rates likely to drop again? Well, rates heading south isn't always a good thing. Some of the main reasons we're seeing this currently occur are the economic growth of our country has been slower than expected in recent years. There's also been uncertainty around global economic conditions like the American and current China trade war that we're experiencing. There's also been a decline in national housing prices over the last 2 years, which has also lowered turnover. Inflation pressures have also been subdued and growth around this area has certainly been below expectation and trend. Demand for credit and mortgage rates has also been at record lows over the past 2 or so years as well. Now, these amongst some other factors, of course, are the main triggers that have led Australia and our economy to find itself in the current position we're in. Now, there are signs, however, that this stimulus that the government has been undertaking is starting to take a positive effect, with Australia's main capital market cities in Sydney and Melbourne showing their first signs of a property and economic recovery and moving into growth, as well as a lot of major infrastructure projects underway which should continue to take our economy in the right direction and see stability ensue. However, as always, it'll be a watch this space and see as we go type environment to keep an eye on these global factors and the like to see if they influence monetary policy and affect our economy further. For now though, we're on neutral ground and we hope to see things continue to improve. Well, we hope you enjoyed this episode. Keep those questions coming right on in. From now, bye from myself, Claudia Cuomo, and the entire C+M residential team. Enjoy that gorgeous spring sunshine and go buy some property.